Unrecovered 4.4 trillion debts may hurt economy, warns AMCON. Nigeria Stock Exchange sets up claims review panel. Oil prices fall on renewed coronavirus concerns as China cases mount. Enugu, Kano, Lagos international terminals may reopen January 20, says Federal Airport Authority of Nigeria. On Business Express today, we shall be taking a critical look at strategies in place to ensure full implementation of the National Social Housing Program, as well as steps to be taken by would-be beneficiaries to key into the scheme. Details of this and more on Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. The management of the Asset Management Corporation of Nigeria, AMCON, has warned that if the outstanding debt of 4.4 trillion naira is not recovered, the economy would be badly hurt. This is coming as AMCON urges all agencies of the federal government and other stakeholders to join its debt recovery drive to guard against the huge opportunity cost of not recovering its huge debt. Group Head of AMCON Enforcement, Joshua Ikioda, said the outstanding going by the 2021 budget estimate rivals the entire budget of 36 states of the Federation, adding that 4.4 trillion naira owed AMCON is bigger than the entire 2021 capital expenditure budget of the federal government, which stands at 3.85 trillion naira. Currency in circulation rose by 249 billion naira from 2.66 trillion naira as of the end of November to 2.91 trillion in December 2020. This is according to data obtained from the Central Bank of Nigeria, which shows currency in circulation rose from a figure of 2.49 trillion naira as of the end of October. The Apex Bank also said as a result of its monetary policy actions, the reserve money grew moderately as of end September 2020 by 2.5% to 13.57 trillion, compared with a growth of 30.4% at end of June. The dollar extended a rebound on Monday as sharp gains in U.S. yields and hopes for more stimulus to boost the world's largest economy prompted some investors to temper bearish bets, pulling the currency further away from recent multi-year lows. One of the areas of priority to the government through the National Social Housing Program is providing shelter, which is incorporated as a component of the Economic Sustainability Plan. Kunle Adeyeye reports.
As part of efforts to mitigate the effects of COVID-19, the federal government rolled out the 2.3 trillion naira Economic Sustainability Plan. This is aimed at addressing the challenges facing every sectors of the economy badly hit by the pandemic. One of the areas of priority to the government in this regard is shelter, and therefore the National Social Housing Program is incorporated as a component of the Economic Sustainability Plan. The program aims at delivering 300,000 affordable housing coupled with creation of over 1 million jobs. These will enable low-income earners to own houses ranging from 1 to 3 bedroom apartments in different parts of the country. the Central Bank of Nigeria has already committed a 2 billion naira facility to the program. The initiative is expected to encourage local content development as the materials for the housing are to be sourced locally. The questions on the lips of many Nigerians are: what strategies are in place to ensure full implementation of the scheme? What steps should be taken by will-be beneficiaries to key into the scheme? How sustainable is it? How will this stimulate the economy?
Well, the program aims at delivering 300,000 affordable housing coupled with creation of over 1 million jobs. This will enable low-income earners own houses ranging from 1 to 3 bedroom apartments in different parts of the country. The Central Bank of Nigeria has already committed 200 billion to the facility. Now, the questions on the lips of many Nigerians are: what strategies are in place to ensure full implementation of the scheme? What steps should be taken by would-be beneficiaries to key into the scheme? These are some of the questions our guest on Business Express, who is the Managing Director of Family Homes Fund, Femi Adewale, would be answering. You are welcome to Business Express.
Thank you very much. Thank you. It's my pleasure to be here.
Okay, welcome. Well, briefly, mass housing program, why do we have it under the economic sustainability plan? Is it necessary?
Yes, absolutely. The fundamental objective of the economic sustainability plan is to do two things. One is to reflect the economy following the impact of the COVID-19 on Nigeria's economy, as indeed for most economies across the world. But secondly is also to alleviate the disproportionate impact on Nigerians, particularly those on low income. And I think that it is determined that there's perhaps no better way of doing that than investment at scale on housing. So the mass housing program aims to do three things. The first one aims to create jobs. Housing creates jobs. It creates jobs directly and it creates jobs indirectly. And that is why we expect that the program will create at least 1 million jobs. The exact figure we are targeting is about 1.8 million jobs through the program. Secondly, it will improve the quality of life of Nigerians, particularly those who are on low income and currently are struggling to have a decent roof over their heads. So it will be providing housing for at least 300 Nigerian families on low income. The third objective is economic, in the sense that the program aims to deploy local materials, locally manufactured materials. So we expect to see our doors, our windows, our bricks, our roofing sheet, our paints being made by Nigerian companies, creating further jobs, but also helping us to conserve scarce foreign exchange, which we so badly need at this time. And that really is why we have the housing program as part of the economic sustainability plan.
Having enumerated these three key areas of benefits of this, can you give us holistically the impact this could create to the economy that is looking to recover?
Significant impact. As I said, first, it is going to create jobs. And jobs means people are going to be earning income. It means that because they're earning income, on average, some of the lowest earners, jobs created will be earning about 3,000 naira per day, so significantly above the minimum wage. Because people are earning, they will spend, so you have consumption increases, and when you have consumption increasing, production follows suit, because people have to produce to meet the need of people who want to consume. So you are seeing a reflation of the economy, and that really is a major strategy across the globe for supporting an economy that is in the situation that we are in now. And I think that the government needs to be congratulated and supported to seeing this program through.
Okay, looking at the economy, there has been this debate over the years where the housing deficit is being put at like 17 million. We are witnessing a population growth that it's moving so fast, new births and all of that. The economic growth is a kind of sluggish, which is to say the deficit must have gone way beyond 17 million. And with the cash crunch economy we are witnessing, though the CBN is bringing 200 billion, is that enough to meet this? Where can government and private sector, how can we go about raising these huge resources needed to ensure that this housing deficit gap is being breached?
Right. Look, I think it's not enough, but it's a very good start. It's probably the largest single investment made into the affordable housing space by any government since independence. What it will do is kickstart a process. It will catalyze a process that will eventually bring in the private sector. So the multiplier effect of this investment by central government is what we must look for. And I think it has all the potential to do that. Is it going to address the numbers of housing deficit that you mentioned? No, I think 300,000 homes is a drop in the ocean. But as I said, I think that is a very, very good start.
Okay, let's take a look at implementation. Governments before now have brought in initiatives, plans to ensure that this deficit is being breached. Coming to implementation, what do you think should be done differently now than it's not been done before?
Okay, we thought very carefully about ensuring that that this is well implemented, and one of the key areas of thought was learning from what worked well and what didn't work so well on previous housing programs going back to the post-independence era. And one of the key things that we came up with, which has informed the implementation of the current program, is one, significant partnerships with state governments. This is absolutely important. So today, of the 36 state governments and the FCT, as of today, we have land commitments by about 27 state governments. And I suspect that by the end of March, we'll have a full capture of all of the 36 state governments.
That's pretty impressive.
Absolutely. So we are getting a lot of buy-in from critical partners who are the state governments, who recognize the impact that these can make to their own local economy, the impact it can make on the quality of life of their own people. So this is the first critical lessons learned. The second critical implementation lessons learned was about a targeted focus on a particular segment of the market where there are numbers. So we're looking at producing homes that are sold for as low as 2 million naira. Now, that is probably not going to be affordable to everybody, but it does go far down our economic
compared to what is obtainable now.
Compared to what is obtainable in the market. So that brings housing within the reach of perhaps more people than any program has happened in the past. That is absolutely critical, because what that does is that it makes a large amount of demand effective. So that's the second lesson learned. The third lesson learned is about the financial structure and the framework around the program. It's one thing to finance the building of the houses. It's another thing to actually find the capital that ensures that people who want to buy those homes can pay for it over a period of time, such that only a proportion of their income goes towards their housing costs. So the social housing program includes a long-term repayment opportunity for the potential beneficiaries, which ensures that for somebody earning about 30,000 naira a month, they are probably spending no more than a third of their salaries to pay for
300,000 housing units for a start. How would that impact on the housing commodities market, talking about the cement producers, talking about the blocks, the wood and all of that? How would that impact on the market?
It will impact on it. It will challenge that market. It will make that market to grow. That market has significant potential to grow. One of the work that we did was understanding, for example, what is our capacity for block making? What's our capacity for alternative materials? For example, stabilized earth bricks. What's the capacity, the market capacity for wood? We actually find that what is happening, that in most cases the utilization in the market is below 25%. Therefore, we've got a significant headroom. What we need to do is to energize that market with guaranteed demand for the products that is being produced. And I should mention here the significant support that we have got through the assistance of government with cement manufacturers, for example. So today we have a firm commitment from Dangote, from BUA, from Lafarge to provide all of the cement.
So there is a private sector engagement to ensure that this particular initiative succeeds.
This is very private sector driven. Government doesn't expect to set up an aluminium manufacturing factory. All of these will put money and demand in the pockets of private sector entities.
Come to think of it, Nigeria is a multicultural and multi-religious country. Talking about the architectural design of these houses, yes. Is it a one design fits all, or the architectural industry will be taxed to do something different? And what will be the impact on them, and particularly the economy? Okay, so we're on a journey here, and the journey that we're on now is basically ensuring that the houses that are built adequately reflect the cultural context of different parts of Nigeria. Okay. So the projects that we're looking at in Jigawa and the design of those units is fundamentally different from what we're looking at in Akwa Ibom or in Oyo or Ogun State. So we respect that. Further down the line, we expect to partner with the build profession to develop standardized house types, but not a national one that reflects the cultural requirements of different segments of Nigeria. That is towards industrializing housing and bringing value to the table in terms of reducing cost. But absolutely yes, we want to build houses that people can relate with and that supports how they want to live their lives. Okay, we're talking about the economic sustainability plan, but the mass housing program could be completed in a few years. Yes. After that, what next?
After that one, we get on and build more houses. Let me tell you some of the key results that will come out of the National Housing Program. Number one, apart from the jobs which are going to be created and the training for new artisans that will be created, we're going to have new industries that can make doors in Nigeria. Wow. New industries that can make glass in Nigeria. New industries that can make roofing sheets in Nigeria, make paints in Nigeria. Those will not stop when this plan is finished. They will continue to feed this industry and feed it effectively. We expect that a housing finance system that ensures that Nigerians can buy a home and pay for it at a price that they can afford over a period of time will have been institutionalized. So
thank you so very much, Mr. Femi Adewale, MD Family Homes Fund. It's a pleasure, and the good news is the issue of rent might soon be a thing of the past for Nigerians.
Thank you. That is our hope. Thank you very much.
You're welcome.
Thank you.
Gold prices fell on Monday after slumping more than 4% in the previous session as the dollar strengthened and the U.S. Treasury yields remained elevated, denting the non-yielding metals appeal. Trading activities on the floor of the Nigerian Stock Exchange closed with a loss of 80 billion naira at the end of the first full trading week of 2021. Let's now see a review of how the capital market fared last week as compiled by Bosede Ebo.
At a turnover of 3.3 billion shares worth 19.8 billion naira in 26,808 deals were traded for the week ended 8th January 2021 by investors on the floor of the exchange. The NSE All-Share Index and market capitalization depreciated by 0.37% to close the week at 40,120.22 and 20.9 trillion naira. All other indices finished higher with the exception of NSE Premium, NSE Lotus 2 and NSE Industrial Goods, which depreciated, while the NSE SM and NSE Growth indices closed flat. The consumer goods industry led the activity chart with 2.26 billion shares valued at 7.5 billion naira traded in 4,031 deals. The financial services industry led the activity chart with 939.2 million shares worth 7.8 billion naira in 14,020 deals. The third place was the conglomerate industry with a turnover of 139.8 million shares worth 182.1 million naira traded in 885 deals. Trading in the top three equities were Champion Breweries, Transnational Corporation of Nigeria and Access Bank. They jointly accounted for 2.1 billion shares worth 6 billion naira in 1,971 deals. On exchange-traded products (ETPs), a total of 196,294 units valued at 816.5 million shares were traded in 38 deals, while bonds saw a total of 10,051 units valued at 12.5 million naira traded in 27 deals. 50 equities appreciated in price during the week, 21 equities depreciated in price, while 90 equities remained unchanged. Bosede Ebo, Business Express.
Stocks were off to a good start at the close of today's trading session. Transactions on the floor of the Nigerian Stock Exchange began the week in positive 33. And at the close of the day's trading session, transactions on the floor of the Nigerian Stock Exchange began the week in a positive territory. The NSE All-Share Index appreciated by 0.08% to close at 40,150.78 basis points. Traders exchanged 335.6 million shares valued at 2.4 billion naira in 5,338 deals. Market capitalization stood at 20.9 trillion naira. Stocks in Asia Pacific were mixed, with South Korean stocks rising again on the back of big gains last week. Musa Abubakar reports.
Africa equity started the week mixed, with South Africa JSE top 40 climbed 0.68% at 58,823.13. Kenya's Nairobi SC20 and Ghana GSC Composite Index were positive at 16.57 and 11.75 points. Tunisia's Tune Index and Namibia's overall started on a negative territory. Major Asia-Pacific markets dipped on Monday, with South Korean stocks hitting a pause following a stellar start to 2021. Hong Kong's Hang Seng Index was above the flat line and gained 0.11%. The Shanghai Composite declined 1.08% to 3,531.50, while Japan's Nikkei climbed 2.36% to close 28,139.03. In the U.S., equities fell in early morning trading Monday as investors assessed the outlook for more COVID-19 relief stimulus. Dow Jones Industrial Average fell 180 points. S&P 500 futures and Nasdaq 100 futures both traded in negative territory. European stocks were slightly lower on Monday morning following the trend set by their Asian counterparts overnight. FTSE opened 0.44% at 6,842.83, German DAX 0.73% at 13,946.67, while CAC 0.52% at 5,677.53. Musa Abubakar, Business Express.
This is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter. The handle is NTA News Now, and the hashtag is BizX. Business Express returns Tuesday by 9:30 a.m. Be safe out there.